Two Bulls in a China Shop is brought to you by these great companies that are giving us money to let you listen to their stuff.
Bullshit, Kyle. We make this show. You and me. Two Bulls in a China Shop is brought to you by us.
Someone's got to pay the bills, Dan, because it's not our trading.
All right, roll them.
You are listening to an entertainment program put together by a company called Financial Ineptitude. Anything said on this show is not an endorsement or professional advice. Would you really want to tell a court of law you were suing us because you thought taking financial advice from two idiots on a podcast put out by Financial Ineptitude was a good idea? Really? Clown hat smiley face. Well, hello everybody, and welcome to another edition of Roundtable Square Traders. I'm your host, Kyle, and joining me for today's discussion is Retail Capital, along with Two Bulls Discord member, Robert R. But before we start overwhelming RC with all our questions, I'm just going to take a quick moment to say thank you to our sponsors and friends over at Manscaped, Trade Pro Academy, and Orderflow Labs. Manscaped is the best in men's below-the-waist grooming, but did you know they have launched a line of beard care products? Lucky for you, we have an exclusive offer of 20% off and free worldwide shipping using promo code 2bulls at manscaped.com. As always, that's the number 2. And when it comes to institutional quality trading education, look no further than tradeproacademy.com. Our free Discord server, you'll find instructions to take advantage of our discount with them as well. And for all you degenerates who enjoy trading futures, you definitely want to check out the custom tools and studies over at orderflowlabs.com. And of course, everybody needs to follow Retail Capital on his Twitter at itsonlymoney12 and his writings over at retailcapital.substack.com. And lastly, be sure to reach out with your suggestions, corrections, or questions for future guests, or even to request to join one of these roundtables. You can do that via email at 2bulls@financialineptitude.com, or you can join that many times mentioned free Discord server, where a bunch of amazing people gather to share our struggles and lessons learned with other like-minded market aficionados. Be sure to put all those links in the episode description as well. All right, now that we got all that jazz out of the way, let's meet today's guests. Retail, how are you doing today?
Hey guys, I'm great. Even though I lost some money today, but very happy to be with you guys. That's my first podcast. So
this is your first?
Absolutely. I'm a very shy nerd usually.
Well, thanks for stepping out of your comfort shell to do this. You've been requested many times. I think Joel's been bugging me to get you on. Robert is really wanting it to happen.
Definitely.
Yeah. When I got the invite, I was really excited, but then I was like, oh, I can't do that. But my fiance was like, you have to do it. So here we are.
Don't worry, I'm sure you'll do just fine. Everyone hates hearing their own voice for the first time, though, so just brace yourself for that.
I'm used to listen to my voice because I'm recording all my trading sessions.
Okay.
So every Saturday or Sunday, I have the pleasure to listen to my voice.
And your accent, that's French, right?
Absolutely.
Are you in France or are you just from France?
No, I'm from France. I'm currently in Bermuda. I'm kind of traveling between the US, Bermuda, and Europe. I'm going to move permanently to the US in a few months once my visa is approved. Mm-hmm. But right now in Bermuda, yeah.
Do you need a sponsor? I'm sure we can find somebody to be willing to marry you.
Well,
his fiance might say something about
I know, right? It's only paper.
And she's American, so it's already sorted out.
Okay. Never mind. You don't need us. Robert, how are you doing, man?
I'm doing great.
It's been let's see. We had you on for one of the news episodes, so this is our second time getting to experience the pleasure of your voice.
Thank you. Yeah, this is my second podcast then. So.
Second, yeah, okay. So, and then this is I can't even count them anymore.
A lot.
I mean, technically, this is my first podcast still, but it's not the first time I've done it. Man, we've got a ton of questions for Retail here, so why don't we just go ahead and open the floor to Robert and let him start diving in and picking your brain.
Sure. So really, I'm a software developer for a long time, but I never worked in finance. So the idea of building software for finance really intrigues me, but I really don't know where to start, where to begin. I've done some things for Sierra Chart and building some studies, but that's really different from creating algos for trading. And so really I'm interested in hearing, and all these questions really are about how to find, identify, develop, and run algos to trade. So I guess we can just start out with these questions. The first one we had was, Rita, where do you get ideas for new strategies, or where do you look for those? Or
Yeah, and that's a question I get a lot. Like every time I publish a Substack, I'm gonna have a few emails from people asking me, "Hey, where do you get your ideas from? Like, how do you do it? Where do you start?" Um, and so to find new strategies, first of all, I'm not coming up with new strategies every week. Also, I would say that sprint time is the most important factor. I've been looking at the charts for around 10 years now, so I kind of developed a relationship with the charts, and every time I see something interesting or outside of the ordinary, I'm going to take a note or I'm going to review my recordings over the weekend and see if we can find this kind of pattern over and over in the database.
You mentioned before the recording that you like to record yourself to have something to review on the weekends. Like, how long have you been doing that?
Been doing that for around 2 years. So if I've been trading for around 10 years and I just turned pro almost a year ago, that was last February. That's because I've been losing for 8 years and a half. So I've been kind of very stubborn with my trading, and I kept doing the same mistakes over and over. And around 2 years
I can
ago,
relate.
Right.
around 2 years ago, I hired a mental coach, and she's been like telling me to change a lot of stuff, including
Hmm.
like reviewing my trading, which I was never doing before. And the first advice she gave me is to record myself every trading session and then to review it after the close. So I've been doing that consistently since then, except that now I'm just reviewing over the weekend. But yeah, it's been so helpful because you can see yourself reacting in real time to the shitty trades that you take, and it has been life changing for my trading.
So are you recording yourself? Like a
Yeah,
video image? So like you can see like your like actually like the changes in yourself physically when you're in a trade?
yeah, absolutely. So I'm
Oh,
recording,
wow.
of course, the screen and then myself because so I've been before that. So I was an actuary and I was able to work from home quite often. So I would just have like my trading software on one screen, and then I would do some work for the company on the side.
Hmm.
But when I would be in a trade, I would not even pay attention sometimes. I would just like do something else or work or be in a meeting. And when I realized that, I was like, I need to change everything.
So,
Wow.
can you tell us like some of the things that you write down, like when you say you see something out of the ordinary? Can you give some examples of that?
Yeah, absolutely. So I'm trading with VWAP a lot with the volume and
Hmm.
the volume profile as well. So one of the first thing I've noticed when I started using VWAP and the VWAP bands as well is like what's going on when we go in um, abnormal territories. So when we are between the +2 and +3 standard deviation or -2 and -3 standard deviation bands. And that's something that's going to happen actually at least like once a day
Hmm.
on average. And you want to see how the price reacts there. And you can compare that to like what has been the market structure over the last few days. And you can try to like derive some statistics. I've got a better example on crypto. So I've been trading crypto for about a year now, and the last 2 months I've been doing most of my volume on Bitcoin. There's something that has been really interesting on Bitcoin in January. It's kind of like the local tops. So if you look at a chart of Bitcoin, let's say you put up like a 15-minute chart, and you look at all the tops, you're gonna see a very funny pattern from the volume. And if you look at all the individual bars of like let's say 15 minute candlesticks with the volume, you're gonna realize that for the local tops, like the volume is much more important than for every other bar. But it doesn't imply that it's gonna be like a top specifically. It's more like how the price are gonna react in the next few candlesticks around that potential local top. There's a lot of stuff like this that you can analyze. I know you're looking for trading ideas. Like one of the first thing when I started programming was just looking at the retest of the previous day low or high or value low area, value high area. That's something that's going to come up consistently day after day. And that's really something you want to have as a criteria, because the more data points you have, the better it's going to be for whatever system you're trying to build.
I remember somebody in our Discord was playing around with the idea of a trade involving a retest of the previous day close, and I was actually surprised to see how often that worked.
Absolutely. Another example, I'm following someone on Twitter named, I think it's Paul Smith, and he's like programming a lot on NinjaTrader. And yesterday, he was kind of bored and he started trying some strategies. And he looked at the 1 minute NASDAQ chart over the last 2 weeks. And he was like, how frequently are we going to retest the typical price of the previous candle? And he defined the typical price as the open, the close, and I guess the high divided by 3. And so if you take that medium price for each 1 minute candle and you want to know how frequently it's going to be retested in the next 30 bars, well, the answer was 94% of the time, which seems crazy, you know?
Right.
Oh.
Because you have a lot of 1 minute candle during the day.
Yeah.
And so I read that and I was like, oh, that's cool. And boom, that gave me an idea to test something slightly different that I'll do probably over the weekend.
What it sounds like is that it really just boils down to screen time. Like the more time you spend staring at the screens, then you start to notice patterns. And then those patterns are what give you ideas for new setups and ideas to test. So it's about sum it up.
Absolutely. And then, you know, being curious, like you want to test a lot of things. Most of the time, it's not going to give you any edge, but sometimes you're going to come up on something that might be useful. I've been also trying to learn about stocks, about options, of course, about crypto a bit earlier on. And all of this can give you some ideas. Like I don't trade stocks, but I've still been spending quite some time programming, like testing ideas for stocks. Same for options. I started last December. I still don't have anything useful at the moment, but who knows? Maybe in like a few months, it's going to be something I use.
Does that answer your question, Robert?
Yeah, no, that's really great. The screen time and absorbing what's going on, and then just being curious about different things that you're seeing.
And journaling sounds like a huge component of that too.
Absolutely, and there's also a lot of podcasts on the topic that you can listen to, especially like some of the old episodes from Chat with Traders. They still do it from time to time, but if you listen to episode 212 and 243, which are like my absolute favorite in terms of like finding trading ideas, it's a great way to learn strategies as well.
I'll make sure I link those in the episode description.
Yeah, I'll definitely check those out.
Also, the Twitter person that you said, can you give me that name again?
Paul Smith.
Paul Smith. Okay, just want to make sure I make a note of that. All right, Robert, what else you got for us?
You kind of already were touching on this, but when you get a strategy, I mean, how much testing do you do on that? Or get an idea for strategy? It may not even be a full-blooded strategy yet, but yeah, I mean, how much testing? When you start to narrow things down and develop, okay, this is a strategy I want to test, not just an idea I want to explore or curious about something, but okay, I'm going to try this strategy. Like how much testing are you going to be doing on that, and back testing in sample versus out of sample kind of thing?
So I spent quite a lot of time. I'm not gonna lie on this one.
Yeah, it does take a lot of time.
I think I code around like 20 hours a week on average, and it's been like this for a long time now. So I would say what really matters when I think I have a strategy, I'm always going to look for some key variables. So are you more interested in like how I develop the strategy, or like how do I like create the process of like making sure it is a good strategy once I have the idea?
Mm-hmm.
Well, both of those actually. So why don't we talk about how you develop the strategy first?
Okay, so let's take an example of the local tops or local bottoms. I've noticed that on average, the volume for a local bottom, and I'm going to give wrong numbers, so you guys can do the exercise if you want to have the correct numbers. But let's say on Bitcoin, since the 1st of January, the local bottoms or local tops, they have a volume on the 1 minute candlestick that is 15 times higher than for the rest of the candlesticks. So let's assume this is correct. And then after that, I'm going to look at, okay, so how much time does it take to have some kind of retracement? Is it like in the next 5 candles, in the next 50 candles? And then I'm going to try to measure the average of the retracement. But I'm not just going to look at the average of the retracement. I want to see all the data points. I want to know, because the average is a good matrix, but you're going to lose a lot of information. So I'm going to look at all of this in detail. And once I know that, so on average, it's going to go down like 0.7%, but when it goes against me, it's going to go up like plus 2%. I'm going to try to see like what is the ideal threshold where I can put my stop, where if the price goes above that limit, it means that most of the time it's going to like reach a much higher point. Right. And on the contrary, I'm going to do the opposite for like my take profit. So this is like where I would start. Then of course you cannot just rely on that, because then it would be some kind of over optimization, and so you're going to end up with a beautiful backtest, but in reality you're just going to keep losing money. So
sounds like my experience.
Yeah, I mean, what I try to do is like testing my IDs on around like 75% of my data set. And here I can optimize the parameters and I can play with that. But then I want to try these fixed parameters on the remaining 25% of my data sets to make sure that the statistics that I get out of the backtested strategies are the same on the out of sample data sets.
Right.
How big of a time range do you test it out on when you, like, I assume you do back testing and let your strategy run and throughout like the historical charts? Like how long of a time frame do you look at?
Yeah. So on the NASDAQ, I've got around 2.5 years of tick data that are of good quality, because getting good tick data is so difficult. Like it's been such a nightmare. And before that, I also have like since 2014 of tick data on CFD for the NASDAQ as well. So I've got quite some data, but now I'm just relying on the last 2.5 years for NASDAQ. For crypto, I've got around a year and a half of data.
I'd heard somebody talking before about trying to optimize your strategies too much to your back testing. Is that something that you are concerned about, or how do you combat that, the over optimization like you'd mentioned a minute ago?
Yeah, so two things. The first one is, of course, to not optimize the strategy on the whole data set. Otherwise, you're going to have really bad surprises. And then the second thing that I do for all my back tests, and I'm going to answer another question at the same time, but
that's fine.
Of course, yeah.
So you want your trades to be independent. What does it mean? It means that, let's say your strategy is going to take like 10 trades a day. And at the end of your backtest, you have your simulated equity curve. And let's say that equity curve looks beautiful, everything is perfect. What I'm going to do is I'm going to shuffle all my trades. So I'm going to take each individual outcome of the backtested system, and I'm going to like shuffle it. So maybe the trade that I took, number 5, it's now going to be trade number 255. And so I do that around 1,000 times, and I'm going to plot all these curves. And the idea is that the original backtested equity curve is supposed to be fairly similar to the other ones.
Right.
If it's not the case, usually it means that you're going to have some days or maybe a few days where you're going to have like a favorable market environment for your strategy, and you're going to have much more winner than losers. But then when the market shifts, you're going to have like a completely different behavior. And so I'm trying to avoid that in my strategies. I'm trying to be kind of consistent over the days. I don't want to have like an amazing week, which is going to have like, I don't know, 85% winners, and then another week, which is absolutely catastrophic because I don't have a lot of historical tick data. Like 2.5 years is not massive.
That
And
sounds
so,
like a lot to me.
I mean, that's a lot of data points, but I know I'm not capturing like a lot of information because, like 2021 and 2022 were like
Completely, abnormal years.
very strange years. Yeah,
Yes.
exactly. So I need to be mindful of that. And so it's not an easy exercise. And, I don't know if I've got the correct answers, but that's what I'm doing at the moment. And seems to be okay.
So that's interesting. So by shuffling the trade orders around, you're basically just looking for whether or not you have the potential for big periods of drawdowns.
Absolutely.
Gotcha.
When you say you've got 2 years of NASDAQ or 2.5 years of NASDAQ, do you mean all of the stocks, individual stocks in NASDAQ, or do you mean the NASDAQ index?
Yeah, the index. Sorry.
The index. Okay.
Where'd you get that from?
NinjaTrader.
Oh, okay.
So yeah, you can export the tick data, which is something I do every day to get like my current statistics, because I've got a few scripts that I run every day to get some market information. And so yeah, NinjaTrader is great for that.
All right. What else you got, Robert?
Just wanted to clarify. So when you talk about reordering your trades, are you like reordering the days, or how do you, or are you reordering the trades just in the history and it's kind of creating a new curve?
So that's the second option. So let's say you have 1,200 trades in your backtest. So each trade is going to be, let's say, plus $100 or minus $60. What I'm going to do is that I'm just going to shuffle that array 1,000 times, and then I'm going to calculate the total and put that on a beautiful chart to see what's going on.
I see. That makes sense. Yeah, I thought maybe you were like rearranging the data so that the trades were taken in a different order to see if there's any relationship between the order that trades were taken or something like that, which sounds interesting, but yeah, I'm not sure how to do that.
I think it's kind of capturing what you're talking about as well. What I'm doing. I'll think about it a bit more off podcast, but I think it's capturing it.
Yes. Yeah, I see what you're capturing is just making sure that your equity curve remains fairly consistent.
Absolutely.
Which makes a lot of sense.
Less volatility in your equity curve.
Right.
Yeah, because there was a question around the metrics that I look for in my strategies, and
it's just going to ask that.
Yeah, the drawdown is a big one. So if you have only one simulated equity curve, you can't really capture the drawdown because there's no way these trades are going to happen at the same place in the future. So really, you want to shuffle that series of historical trades to see what is the real drawdown. And it's fairly common if you do that, like your original backtested strategy has a drawdown of like 15%. But then if you shuffle it and you look at the worst drawdown, it can be like 50%, which is a massive difference.
Right. Which might be difficult to sit through.
Just out of curiosity, why not just use the percentages of the win rate and then, because I mean, like knowing the chances of having a winner, you should be able to basically simulate the data, knowing the win rates, to see how many randomized losses or wins you get in a row. You can almost just run that as like a simulation.
It's not gonna work unless your backtested strategy has like 10,000 trades, because
Okay.
let's say you have a simple strategy that has a 60% win rate.
Yeah.
So the chances of losing like 10 trades in a row are like 0.01%. The chances of losing 5 trades in a row are 1%. So let's say in your backtest you have just say 10 trades or 100 trades. Let's take 100 trades.
Okay.
Maybe you're gonna have one occurrence of 5 losing trade in a row. Okay, because it happens like 1% of the time. And so if that was your backtest, then one time it's gonna happen 5 loser in a row. But if you like resimulate everything a lot of times, then you might be able to see the real chances of having more losers in a row. Because in your backtest, you just have like you don't have everything.
Right. No, that's what I mean. I don't mean using the actual trades. I just mean using the win rates and loss rates. Like just knowing those percentages, you should be able to almost generate like a simulated equity curve.
Absolutely. Yeah.
Like I think there's a spreadsheet that I think it's Financial Trading Wisdom or Financial Wisdom is their YouTube channel had. I'll have to see if I can dig that up and forward it to you, because it has a spreadsheet basically where you just punch in like all the key metrics of your strategy, and then it'll actually simulate 1,000 trades for you and show you like the random distribution, like if you had a good run, if you had a bad run. I think, or out of the 1,000, I think it shows you like here's the best, here's the worst, here's the median.
I've seen tools like that.
Okay,
Yeah.
I misunderstood. Yeah, FTMO has a tool like this as well.
Okay.
That you can use. But I developed one actually, and I wrote an article about this where I'm doing exactly what you say, and I'm giving different type of strategies, different win rates, different risk reward ratio, and I'm looking at all the different simulations, because actually that's one of the first exercise I did in programming around risk management, because I was losing a lot because I was taking shitty trades, but also because I had no risk management. So I would,
Yes.
Yep.
like, I'm not really proud of that, but I would load my my trading account with like 1,000 euro very frequently, and I would just use everything that I had on my CFD account, and basically you can lose everything in one trade. Like a 1% move on Nasdaq would wipe my account. And so I did that a lot of time. And at some point I was like, even if I'm the best trader, if I keep betting like 50% or 70% of my account on every trade, I'm going to lose it all at some point. That's inevitable.
Right.
And so that's why then I did a lot of work on risk management and simulation. And I think actually that's one of like the best article that I wrote in terms of views and feedback from the readers.
Risk management.
Yeah.
I will make sure that gets linked to.
So what did you decide to do based on that? Like, what was your conclusion?
So my conclusion is that you can still risk a significant amount per trade if you are 100% certain of your edge. On my personal account, I'm never going to risk more than 0.5% of my account. But with prop firms, I'm risking something that's going to sound crazy, I guess, but around 5% of my account on each trade for two reasons. The first one is that my strategy, I took like more than 2,000 trades since I turned pro, with a win rate of slightly above 60%.
That's a great rate.
Wow.
So I know that, I'm not gonna have a long series of losers.
Mm-hmm.
And also it's a prop firm, so it's not really my capital. If it doesn't work, it doesn't work, and I can get a new account. So
Right.
I haven't talked a lot about this on Twitter. I just showed the payment proof from the prop firm, but the account I started on the 1st of January with them basically is a 100K account, but really you can only lose like $10,000.
Right.
So do you do 5% of the drawdown limit or the full account size?
Yeah, I'm gonna come to that. So
okay.
On this account, I took around 250 trades since I had it, and my average risk is around like my average loss history is around $850, and my risk to reward ratio is at 1. So on each trade, I'm risking 8%. So $800 out is massive, when you can only lose like $10,000.
Right.
But I turned this into $29,000 in January, and in February I'm like $16,000 at the moment.
Oh, wow.
So if you don't release that episode until the end of this week, you guys can look up the leaderboard on FTMO, and I'll be there. After that, so you'll have my real name, but but yeah. My point is, you can risk a significant amount of money, especially with prop firms, again, because there's only upside and very limited downside for your personal wealth, and it can work if you know that your stats are legit.
With the prop firms too, you almost have to be more aggressive because you have a month before you have to make another payment. And normally, most people want to know whether they're going to pass or fail that eval within that first month. Otherwise, you're just wasting money.
Yeah, that's you have to be quite aggressive. That's true.
Yeah, or at least that's maybe my issue with them.
Are you trading with the algo with the prop firm, or is that discretionary?
Yeah, so I've got a few prop firms. I've got FTMO, Topstep, and Apex. So on Apex, I can't, it's against the terms and conditions to use algos, so I can't do it.
Okay, all right.
Yeah, on Topstep, you can, no problem. And on FTMO, it's almost fully automated. I just need to do some more work to have it completely automated. At the moment, I just get the signals from Python, and I take the trade manually. But soon it's going to be completely automated.
Why should you listen to the next roundtable episode with Retail Capital and Robert from our Discord channel? Why don't we let Retail tell you?
Hey guys, it's Retail Capital. If you want to learn how I lost $75,000 in one day and learn about coding, listen to that episode.
New roundtable episode coming out March 6th. If you haven't heard by now, Manscaped now sells beard products. That's right, once again revolutionizing men's grooming with the brand new Beard Hedger Pro Kit. From a beard trim to a fresh shave, the technology behind the Beard Hedger Pro Kit allows you to shape your signature beard look. Now you can finally use Manscaped products to make your drapes match your carpet by going to manscaped.com and using code 2bulls for 20% off and free shipping. God damn, I was going to make that joke. Our friends over at Manscaped were kind enough to send me the Beard Hedger Pro Kit, and I gotta say, I was impressed with the quality and performance of the products. My thick, coarse beard hair has been giving me trouble with trimmers in the past, but the Beard Hedger was able to cut through the thicket without any tugging or discomfort at all. And because the trimmer has one rotary wheel with 20 length settings with only one guard, I don't have to worry about losing or breaking attachments anymore. So I've tamed my mane, and now you can too. No one likes a weird beard, so say goodbye to your stubble trouble with Manscaped's Pro Beard Kit. It all starts with that beard hedger that I mentioned. The thing's a juggernaut of fixing faces. Not only does it have the trimmer with the rotary wheel that gives you the 20 hair cutting lengths on just the one guard, it's also waterproof so you can shave in the shower and avoid all the hair in the sink. The titanium coated T-blade is tough on hair but smooth on your face, leading to a single stroke efficiency that brings satisfaction one stroke at a time. Phrasing. The Pro Kit doesn't end there, though. They also created 4 dermatologist-tested formulations for your post-trim care. First is the Beard Shampoo and Conditioner. Gotta remember that all your hair is different. Beard hair, as I mentioned, is more coarse and easier to damage than the hair on your head, if you have hair on your head. That's why the kit has made shampoo and conditioner specially designed to moisturize, reduce ingrown hairs, replace natural oils, and promote beard health. Next, the kit has Manscaped's Beard Oil, an essential piece for your main facial accessory. No one wants a guy whose beard is brittle and dry. The oil relieves dryness both on the beard and the skin beneath while adding a little shimmer and shine, which makes you look extra fine. Cap off the kit with the Beard Balm, a pomade that shapes, styles, moisturizes, and tames for a sculpted look to attract any fellows or dames. The Pro Beard Kit also comes with 3 free gifts: beard brush, comb, and scissors to ensure your beard is ready to impress. So get 20% off and free shipping with code 2bulls at manscaped.com. Of course, that's the number 2. That's 20% off with free shipping at manscaped.com using code 2bulls. Manscaped Beard Hedger, 1 stroke, 1 guard, 20 lengths.
This podcast is sponsored by Talkspace. You know when you're really stressed or not feeling so great about your life or about yourself? Talking to someone who understands can really help. But who is that person? How do you find them? Where do you even start? Talkspace. Talkspace makes it easy to get the support you need. With Talkspace, you can go online, answer a few questions about your preferences, and be matched with a therapist. And because you'll meet your therapist online, you don't have to take time off work or arrange childcare. You'll meet on your schedule, whenever you feel most at ease. If you're depressed, stressed, struggling with a relationship, or if you want some counseling for you and your partner, or just need a little extra one-on-one support, Talkspace is here for you. Plus, Talkspace works with most major insurers, and most insured members only pay a $25 copay or less. No insurance, no problem. Now get $100 off your first month when you go to Talkspace.com/comedy. Match with a licensed therapist today at Talkspace.com/comedy. Talkspace.com/comedy.
Are all your trading automated, or do you do any discretionary?
So last year, I did around 20% of my volume with my algo strategy,
Mm-hmm.
and I'm planning to get to 80% by the end of this year. So right now, I'm in a transition phase where all my trades that I take manually, it's following some of the indicators I've been developing.
Okay.
So I only enter if I have a signal. Otherwise, I don't enter, which makes my life so much easier.
Right.
And because that's also something, over trading. Like I've been over trading for so many years, and having just a binary output from your indicator telling you that the price is in a zone where you can trade is been great help for me.
It's almost like it's a relief, like to not have to rely on your discretion, because I think I've proven, at least for me, that my discretion is shit or not to be trusted. Like if I could invert the buy sell buttons on my mouse, I think I might have a much better result.
Yeah,
So,
I've been there too.
Yeah.
So you just mentioned that you're getting signals from Python. So is that something running in the background, getting a data feed from NinjaTrader and calculating those signals?
Yeah. So that's for cryptos on Bitcoin, because like something I love about crypto is that it's so much easier to get good data and live data. Like for futures, it's a nightmare, or you have to pay like a lot of money.
A lot.
Thank you, CME.
Oh.
Yeah.
For crypto, you can stream the data so easily. Like as long as you're comfortable with the library request on Python, you can get basically all the data that you want in real time, which is what I'm doing. And then I just have my scripts running in the background that's gonna give me a signal when I'm supposed to enter a trade. It's not even the direction, because I just base my trading on the volume, so I can easily tell if it's a long or a sell.
Okay.
How much experience did you have with programming before you started diving into, I guess, utilizing it to help with your trading?
So I started programming around 15 years ago when I was in high school.
Mm-hmm.
I was like just messing around and trying some stuff. We had a website in France where you could create like two-dimensional video games, and I found it was fun, so I've been doing that. And then I was in actuarial school. We were doing a lot of programming to kind of capture risks, all type of risks. And when I came to trading, at first I didn't really use programming, but I was still programming for my job. So I kind of always programmed over the last decade or so.
So what if there's someone like me who, I mean, I have probably a leg up on the average person because I took some classes in high school, but I mean, that was a long time ago and not necessarily still at the forefront of my memory. Like, where would somebody who doesn't have like necessarily experience of a 9-to-5 job learn how to code?
So for me, the best teacher is just to get your hands dirty. So I would advise to first install Python. That's the first step. Then the second step would be to try to get some data. I always recommend Yahoo Finance because it's a really easy library to use with Python. There are plenty of examples available online where you can get data for any stocks that you want or any indexes, options. And then you can start with simple strategies. So you're going to start with the daily candles, and maybe you want to see what happens when we have 3 green days in a row of at least 1% each day. What happened the next day on average? Like starting with like simple things that you can check visually, looking at the charts to make sure it's correct. But that's where I would start. Otherwise, if you want to build like solid foundation, I love DataCamp. That's a kind of an online academy where you can learn Python and other programming language. But it's really good. It has everything you need to know to become a great programmer. It's going to take a few months, but it's absolutely worth it.
It sounds like you do everything with Python then? You don't use like Visual C or any of the other ones?
Well, I kind of have to use it for NinjaTrader.
Okay.
I do my own scripts on Python, and then I've got a really good friend of mine who is coding them for me in Ninja. So yeah, I do everything with Python, but I need some help on the other languages.
I've heard Python's pretty intuitive and easy to learn. I've just never taken the time to check it out.
Python is so easy to use that in 5 lines of code, you can get like the last 10 years of data for Apple or Google or whatever stocks you want. That's how easy it is to use. Like, it is incredible.
Wow. All right.
Yeah, it's great to get started with that, and also built-in tools to do, to work with that data, in a table.
Yeah, there's a few libraries that you need to know, and there's pandas that you're going to use to manipulate data frames. There's NumPy for all the computation. You're going to have SciPy, Matplotlib to visualize whatever you're trying to create. And I would say in the top 5, requests to get some data from different sources online.
I'm gonna have to ask you for that list because I couldn't type fast enough to keep up.
I'll send it.
Okay, perfect.
Rich, I had a question to go back. So you said you were backtesting with the tick data. Are you using a Python package to help with that backtesting?
No, I created everything by myself.
Okay.
It was more time consuming, but at least I understand everything in my backtest, which I find better.
Yeah,
that's actually a good point because, like, when you create something yourself, like, you fully understand it. It seems like when you try to take somebody else's thing and adapt it, then your understanding of it is usually not as solid as if you did it yourself from the ground up.
Yeah, and I did that because before trading futures, I was trading CFDs on IG market, and you could do some backtests on their platform,
Mm-hmm.
but it wouldn't go at the tick level. And so let's say you have like a scalping strategy looking for 5 points. So 5 point take profit and 5 point stop loss. Sometimes right after your entry, you're going to have a candlestick that goes in both direction in the same candlestick.
Mm-hmm.
So there's no way to know if it's a win or a loss. But the software was telling me it was a win.
Oh, okay. I gotcha.
And when I realized that, I was like, okay, that's not going to work. So now they fixed that. But at the time, that's when I realized that I had to do, something that is better than that. And so a good way that I found is you can like look for the signals on like 1 minute candlestick if you want to gain some time rather than going through the whole ticks in your database. But once you have a signal, then you have to switch to the ticks because it's gonna give you like the true winner or loser.
Mm-hmm.
Right.
No, that makes sense.
Right, because the candle could form in a way you actually hit your stop before your target or something like that.
Yeah.
That's actually something I was running into when I was just backtesting with just the simple candlestick patterns on TradingView. I could run into that and be like, well, I wonder how much open profit this had. There's no way to know if I would have hit my, point to move stops to break even because this candle is a massive doji.
Right.
Yeah.
Yeah, same in Sierra. It has the candle or the bar-based backtesting and then the tick-based backtesting. And bar is much faster, but tick is going to give you more accurate results.
Anything that speeds up the backtesting on Sierra. Oof.
Yeah, but it's you lose a lot of accuracy by going to bar testing.
I know. All right. Well, do we make it through all the questions already?
There was something around the matrix that I didn't fully cover.
Yes.
We discussed about the drawdown, but
yes. Yeah. Do you use any particular matrix like the Sharp or Sortino ratios or anything like that to judge your strategies?
Yeah. So the first one is going to be the number of trades. I want to have a really large number of trades to make sure that I can rely on the backtest. Usually it means at least 1,000 trades that I want in the strategy. Then the second most important metric is going to be the drawdown. So I'm trying to not get anything below 15% of drawdown. Otherwise, I just work again on the strategy or I just throw it away. The independence of the trade, which is what we discussed before. I want to make sure that I don't have like half of my winners during the first 2 months and then only losers for the next 10 months.
Right.
Profit factor is something I really like. Trying to get it above 2 for my automated trading. If it's below 1.5, I will definitely not use that strategy. And win rates, risk reward ratio, not as important as the rest. And finally, I just want to make sure that my strategy is giving better returns than the asset I'm trading over the specific period of time.
Oh, fuck. I feel like I slacked off and missed that point. Better than buy and hold, basically.
Yeah.
That's a good idea.
Yeah, that is good.
No, sure. Might as well figure it out if I'm just wasting my time.
Thank you. So when you're running a live, so you've gone live with an algo, do you have guardrails to determine if you might want to stop it, or do you give it a certain amount of time before stopping it?
No, so I've got a stop every time it loses 3 trades during the same day. The algo is shut off.
Okay.
I don't have any stops for the winning days, but for the losing days, I've got a hard stop because it just means that the market conditions for that specific day are not good, and I'm going to just keep having losers.
You said that's not for the green days? So is that just any 3 losing trades in a row, or is it only 3 losing trades that result in a drawdown?
3 losing trades in a row.
Okay.
Because so this strategy is based on high volumes.
Mm-hmm.
And so let's say you have like a trend day, you're going to have a lot of like local bottoms.
Right.
And so if I get like a signal every time to go long, every time it keeps dipping, I'm just going to get murdered at the end of the day. So that's kind of the rule that I found that has been working quite well since I launched it.
Do you have a limit in mind when you would just turn it off and decide that it's lost the edge and start developing new strategies?
Yeah, well, actually, it happened. It happened in the past already. Basically, you want to compare like every week. You want to look at the stats of your algo and you want to compare them to the backtest.
Mm-hmm.
And if it deviates like significantly from the backtest that you have, it means that something is not working anymore. And so I'm going to look at the deviation from the current statistics to the backtested one to see if I want to continue using it.
That's an interesting question. Do you do any fine tuning of the algos then
No,
as each week goes on, or you just kind of leave it going? If it's still working, it's not broke, don't fix it, kind of thing?
I don't do any of that, even though I have some variables that I use that are based on some parameters of the market.
Mm-hmm.
So, for instance, my stop loss is going to be based on some volatility metrics
Right.
that I have, and it's going to change like every day.
Yeah, those kinds of things make sense, but like the actual core of the strategy itself, it just, unless it deviates substantially on your weekly review, it set it and forget it kind of thing.
Yeah, this I wouldn't change.
Mm-hmm.
Also, one of my previous strategy got into a drawdown of 18%, which was more than what I had during my backtest.
Uh-huh.
So I just shut it off a few months ago, and I need to review it. But yeah, things like that will happen. Like I'm not expecting my strategies to work forever.
Right.
And usually it's something people have in mind when they come to algo trading. They think like, okay, I'm going to code something and it's going to work until the rest of my life, and I'm going to be able to drink cocktails.
Right.
Yes.
The money printer. Yeah.
Yeah, exactly.
Yeah, it's the absolute opposite. Like you have to spend so much time coding and looking for new ideas. It's a full-time job almost.
Well,
Yeah.
so how long does an algo, like how long is the lifespan of a typical strategy that you come up with?
Well, I hope I'll be able to come back 10 years from now on this podcast and give you an answer. But
Let's not wait that long.
Fair enough.
since I've been using like live algos for just a few months,
Mhm.
it's of course difficult for me to give an answer.
Ah,
What I
fair
can
enough.
say is that like one of my algos didn't succeed as the backtest suggested, and the second one is doing really well so far. So
Mhm.
got like a 50% win rate with my live algos at the moment.
How long did it take to develop them?
A long time. I mean, like the reversal algo that I have that is working now is something that I've been thinking for such a long time
Mhm.
on a higher time frame. I developed it like around a year and a half ago, and it took me like once you have the idea, it's not going to take you a lot of time. Like I'm just going to lock myself in my office, and in about 2 weeks, it's going to be done, and I'll be happy about the results.
Right, right. That's fine. That's one thing I do miss is getting into that coding zone where like everything just kind of like that's nothing but you and the screen.
Yep.
That
Yep.
is the best.
Get into that flow state of just writing code.
Yep.
Yeah.
Yep.
I'm curious, Rita, now that you've got a few months, I guess, of live algo trading, have you gone back and done the back test over that same period to see how the back test compares with live for the same data?
Yep, absolutely. It's very similar.
That's
There's
good.
not a lot of there's not a lot of differences. A bit on the slippage. Sometimes I'm gonna have a few ticks less or a few ticks more, but overall, it's very close.
That's something Purdue mentioned that I think I need to get better at doing is going back and replaying the same weeks just to see how well my actual trading compares with the way I'm supposed to be doing it. Like, if I look at the same data, am I taking the same trades? You know?
Right.
Yeah, I think everyone should do this.
Yeah.
There was I think it's Anthony Frudeli who said that on
Yeah.
Twitter. Like
Mhm.
that's something he does like consistently. And when I read that, I was like, yeah, that makes so much sense. Like you want to see if you are executing like perfectly as per your plan, because that's where you make your money.
Right. Right. So you've been on a 10-year journey, it sounds like, and starting to realize the fruits of your labors. Like, what kept you from getting discouraged? Like, how'd you keep on with the drive and the dedication to keep moving forward?
Yeah, that's it has been a crazy journey so far. And even though I lost for more than 8 years, I always loved the market. Um, like money is not my driver at all.
Hmm.
I, I just I just can't stop thinking about the market all the time. So what kept me going at it is, of course, the love for the market, but also I was kind of fortunate with a kind of high-paying job
Hmm.
as an actuary in the past. So I was able to like put 1,000 or 2,000 every month or so on my account, and even if I would lose it, that was just like a demo account for me.
Right. Didn't hurt you.
Yeah, I mean, I couldn't save any money, but
Yeah. But it was money you could lose. Yeah.
Right.
yeah,
Yeah.
exactly.
Yeah.
And yeah, I was just fascinated, and I hate like the work environments in like the big companies. Um, and I wanted to get out of that.
Yeah.
So, last year, even though I was, still having like some big losing day from time to time, I still decided to quit
Hmm.
and like give it a real shot, because I had to work like 60, 70 hours a week most of the time at my job. So you can't really focus only on trading. So I was like, okay,
Right.
I've got 2 years of savings for expenses and like everything that goes with that. Let's give it a real try, and it has been the best thing. Like
That's
I can focus like my whole day on trading.
that's a very similar journey to, I think, what I had. Although I'm still working on getting towards the profitability part, but it was kind of something similar. Like, I was working a job that was, paying well, but I think what I found is when I found the markets, I found that I didn't have the drive to keep doing the other job at all.
Yes.
So,
Yeah.
Yeah. Same here.
yeah. So kind of the same thing. Like, I had enough money put away that I, can afford to live off of that for a few years while I give this like a real shot. Like, what's something that you wish you could go back in time and tell, 5 years ago yourself to try to shorten the development curve?
There's two specific examples. So the first one is to not gamble 50% of my account on each trade. Then
That's a
I
good
would
one.
have gained a lot of time in my journey.
Yeah.
But I guess I wasn't just ready for it yet, so I have to accept it.
Yep.
Sure.
The second one, a few years ago, I had an insane lucky run. So I ran up an account from 1,000 euro to 75,000 euros,
Hmm.
and I lost it all in one day.
Oh.
And
Oh.
that day,
Did you bet 50% of 75,000 or something like that?
I bet it all.
Bet it all. Yeah.
Let it ride.
Yeah.
Yeah. And yeah, actually, I never talked about that loss on my Twitter.
That's a tough one.
But
Yeah.
I was like, that was insane. And I was like working from home in a meeting, and I was like, what the hell am I doing with my life? I just lost like a crazy amount of money. So these would be the two things I would definitely not do again in the past.
Yeah. Well, they're related, right?
Yeah.
It's about risk management.
I can save you some remorse and let you know that, like, we started this podcast, like, me and Dan, 2 years ago or so, and we had some of the best and brightest minds come on and tell us exactly what we needed to do to be successful, and it didn't matter. Like, until you've lived through it and like experienced it, I don't think you understand what lessons people are trying to teach you. Like, you almost have to take your licks.
Yeah.
And it takes time. For
No.
some people are quick, and maybe it's going to take 2 or 3 years.
And fuck
Some
them.
people, and for some people, it's just going to take like 10 years. I'm very slow. It's very difficult, I feel, when you come from like a scientific background to do trading,
Oh,
because I was used to like, if I do some calculation, I know it's going to be right. Like that's my job. That's what I
oh,
do.
yeah.
And I was always very good at my job. But when you're trading, even if your trade is good or if it's bad, like maybe the outcome is going to be the opposite.
Still
And
element of randomness to it.
exactly, and it was very difficult for me to accept that.
Yeah.
It took a lot of time. There are so many obstacles in the trading journey, like from the strategy to overcoming like all the mental difficulties from it. It's beautiful.
That's phenomenally said.
Yes. So what are you? So you've got your professional trader now, which is awesome, and you've got the goal to get 80% of your trading done with algos. What are your big goals after that?
I'd like to work for a firm,
Uh,
like maybe a quant firm or some big names, just to be able to scale up and make some real money at some point, and also for the challenge of working with professionals in the industry. That would be one of the big goal.
Hmm.
Then the rest is pretty much the opposite. It's just like keep doing my trading, scaling up in terms of size, because in trading you can always compound. There's no limit. So if I just keep doing what I do now, and if it works for the next 10 years, who knows where I will be? But it's just improving one day at a time. And I think that's all that matters in trading. If you're better than yesterday, you
Ah,
can accomplish a lot of stuff.
thank you. Thank you. That's a
that's
phrase
great.
that I've used for years. Better than yesterday.
Yeah. Suck a little bit
Yes,
less every day.
exactly.
All right, Robert. You have any other questions for retail here before we wrap things up?
Well, so retail right at the end of last year, you tested out, put your toes in the water of creating a Discord server, and I was on it right away, as we know, we talked about that. So I think that would be really useful to continue this discussion about coding and trading on that server if you want to try that again.
I will probably do it again. I just realized after creating it that it would take a crazy amount of time to like take care of that Discord, and that people will not specifically participate a lot. And so I kind of just gave up, and I was like, okay, I'm not ready for this. I'm not going to force it. So I'll try again later. So I will do it at some point, probably in like the second part of the year, or when the volatility reduces on Bitcoin.
Mm-hmm.
But
Okay.
because I want to talk more about programming, like on Substack, it's great to connect with people, but then we can't talk on a daily basis. So Discord is a great option, definitely.
Well, I just invited you to our server. You're welcome to just poke around and make use of our community if you want until you're ready to start your own. That way you don't have to worry about maintaining it.
I appreciate that. Actually, I like that idea.
That would be great. Yeah, join us there.
Perfect.
It's not a very busy. I mean, we're not chatting all day long.
Yeah.
Yeah, it's fairly low noise.
Sounds perfect for me.
All right. Well, I had one other thing that I wanted to bring up, but I'm not sure we got time here. I was just going to ask if there's anything that I can do or say to try to mend the fences between the French and American people, because it seems like there's still a lot of tension between the two of us. Or maybe you can teach me a phrase that I could say next time I meet someone who's French that basically says, I'm sorry that we keep sending our worst people over to your country and ruining it.
I mean, I love America, so I'm not a great example for what you're looking for because I really dislike French people on average
Oh,
because
don't say
they
that. I'm trying
no,
to
but
mend
like
the fence.
There we go.
I'm I'm on the American side. Like French people, they complain all the time and they never get things done. So I really much love the American mentality of, just get to work, do your stuff, be happy for other people's success. Like,
Let me warn you, that's also not the norm here either. Yeah, there's a lot of people like to complain and not bring solutions. That's something that used to drive me nuts. Like if you have a problem with something we're trying to do, like come to me with a solution to make it better. Don't just complain about it.
exactly, that's the most important, being positive and bringing something to the table.
I think just in
Yeah,
general, most people aren't positive these days anymore. Anyway,
it's a difficult time.
I don't know. All right. Well, sadly, folks, we have come to our end with the end of our time with Robert in retail. But don't worry, there's still plenty more to see at his Substack. Find that at retailcapital.substack.com, as well as some great content he posts on Twitter. You just got to follow at It's Only Money 12, and that's the number 12. We'll put those links in the episode description. But for now, we got to say thank you so much to Retail Capital and Robert for taking the time to join us. Robert, thanks for the questions. They've been fantastic. And Retail, thanks for the time to give out the well thought out answers and all the other resources that you provided us with. Can't really say thank you enough. And thank you to everybody who stuck around to the end. We'll be back soon with another exciting episode. Till then, we got to say goodbye. So, goodbye.
Bye.
Bye bye.
Two Bulls in a China Shop is an entertainment program, and all thoughts and opinions expressed in the show belong to the hosts and not of any company. They are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide entertainment about stocks in the financial industry of trading. If you make trades based on what you hear in this show, you assume all risks for those trades.